I cannot be more thrilled tonight to have an individual who understands energy investments. He probably understands it more than 99.9% of people. Cole Smead is CEO and portfolio manager at Smead Capital Management. He oversees global equity portfolios with a value investing approach, and it's rooted in a lot of history and deep understanding of economics. Cole, thanks so much for joining me. I have a hot take question for you just to kick things off. Are you investing your money into Canadian energy today?
The answer is yes, and it couldn't be a better time to be doing that, to be honest.
Tell me more. I want to understand why you're saying that.
Yeah, I mean, just take a broad view. Like if you're Canadian, look at the loonie versus the dollar. When the loonie is at par with the dollar, it means everyone loves Canadian energy equities. That's what history argues. And when it trades at a big discount, it means that the energy business is not well liked. And that's a pretty good simplistic way of thinking about the long-term pendulum of Canadian equities, but also the energy business in Canada.
Let me ask you this, just with regards to the outlook for Canadian energy, does it change for you? I know that a cross-border pipeline deal isn't really highly regarded as a priority for the federal government, although it being one for Alberta. If the federal government doesn't want to support a energy pipeline, to the United States, rather increase domestic growth, does that pose for any scalability issues or any lack of just scalability in terms of growth for these energy companies in Canada, or you don't really see that as a problem?
I would say no. Let me comment on the pipeline thing really quickly. We look at the WTI to WCS spread, so just the difference between what effectively Canadian oil's price relative to U.S. oil. And you'll see that spread has been coming down over the last few months relative to the past. Normally it's $15 to $20. It's been really sub $15 for a lot of the last few months. And I think what the markets are beginning to price in Canada is the idea that pipelines aren't going to just be going south like they have in the past. So you think of like a Keystone XL pipeline and those kind of discussions, that's going south to the United States. Really what you're going to find is there's a much more pragmatic conversation around pipelines east and west, AKA you're not as fixated on sending oil to America. And I think that's coming out of the politics. I know that from an Albertan perspective, there weren't many people that voted for Carney in Alberta. At the same time, if you listen to what Carney's saying, he's way more pragmatic than the last prime minister, obviously Trudeau. And so I just think you're seeing much more pragmatic conversation around getting Canadian energy out east and west to the Atlantic and the Pacific. But that doesn't change how tight the global oil market's likely to be. And Canada is going to be center stage for meeting that need.
When you say the oil markets, just from a global perspective, give us just a full rundown in layman's terms for us, just to understand what the need versus maybe not needs would be. I know that we saw, the USA and the EU sign a deal which involves a ton of energy development and trade there. I just am curious, how does that change Canada's relationship with the EU, or is there room for both?
Yeah, so I'll give you a way of thinking about it longer term. So if you look at energy consumption, whether we're talking electricity or natural gas or oil, human flourishing, aka economic growth and incomes going up across the world, that's what causes more energy consumption. So the bias people should have in the long run, the economics are terribly positive and humans flourish, which means there's always long-term need for energy. And I think one thing that we lost on a lot of people is the idea that we're so much more efficient because of technology that we're going to use less energy, kind of an energy starvation idea. And that's just never what happens. If you think of all the great technologies, think of AI. I was using Grok 4 yesterday, getting some super old school data on stocks and stock returns. It took me an hour to get 5 question answered. It took a ton of energy. And the reality is without energy present to do that, we could never do that. We can't starve our way to that future. So let's just say we need 1 million barrels more of oil per year every day to go out and meet the needs of the world in the next decade. That's 10 million barrels we need in 10 years. And every year there's about 2 million barrels that get depleted out of existing assets. So if you do that math, it's -2, you got your +3. That means you need 3 million barrels of supply meeting the old assets plus the new needs. And you're not going to find enough investment going on out there. That's part of the reason why Canada is so attractive, is that there's long-dated assets in the tar sands, in Alberta, for example. And those long-dated assets means that they can meet the need over the next 30 to 50 years. And there's just very few people. The Permian, shorter assets can't do that. And therefore, there's a lot more reinvestment.
Cole, thank you. We'll be right back to discuss your comments a little bit more between East and West Pipeline. Stay tuned for more.